Tjena Hans-Henrik, är du med från ditt hem?
Ja, det är jag.
Perfekt. Som ni vet så har ni fått en inbjudan och vi kommer ju gå igenom frontier markets idag. Det vill säga gränsmarknadsländer då, som vi kallar det också på svenska. Ska jag se här, ska jag få ordning på min presentation så jag kan... Så, lite att tänka på idag. Vi har ju Hans-Henrik som sitter i Köpenhamn, han kommer berätta lite om det. Och jag sitter i Malmö idag, men nu börjar vi bli vana med det här att vi sitter på olika ställen. Men välkomna hit. Och vi kommer under 45 minuter till en timme prata om frontier markets. Men vi ska också prata lite kring covid såklart och den pandemi vi är mitt i här. Och kul att få höra lite hur man ser på Sverige från det danska hållet. Vi kommer lite till det här. Som ni ser här så har vi ju frågor som vanligt. Ställer ni på den knappen som heter Q&A. Jag kommer få se frågorna som kommer och vi kommer kunna ta dem efterhand. Alternativt på slutet. Jag kommer också hosta lite och ställa lite frågor och lite förtydligande om jag tycker att det behövs under presentationen här. Vi spelar in det här, vilket gör att vi kommer kunna se det här i efterhand. Så har man någon fundering, vad hände där eller vad sa han för någonting, så kan man alltid ta det. Men annars är det ju alltid bra att kunna återkomma till sin rådgivare med frågor. Då Hans-Henrik är dansk, så ska jag, inte bara för min skull utan för andras skull här, så kör vi det här på engelska i så stor utsträckning som möjligt. Jag vet i alla fall själv att när jag och Hans-Henrik pratar med varandra jag på svenska och han på danska, så blir det ofta missuppfattningar. Så vi kör det här på engelska i så stor utsträckning som möjligt. Men vi kör igång det. Vi har en agenda här. Vi kommer presentera lite av förvaltarna. Vi kommer gå in lite kring Danmark och covid-19. Men framförallt så ska vi lägga tiden på frontier markets. Varför vi ska investera i den här marknaden. Den processen och portföljen som Hans-Henrik och James jobbar med idag. Och lite kring avkastning och sammanfattning på slutet då. Hans-Henrik, how are you?
Not too bad. Surviving. No coronavirus yet.
That's perfect. And as I understand, I haven't seen you on the office for about 2 months here, and you have had a lockdown in Denmark. How has that been?
That's been okay. It's from a work perspective. Me and my colleague James, we can do exactly the same as if we were, at our office in Malmö, or if we are at our home. Basically, we just need a laptop and a telephone, and we have screens and everything, so we can easily work from home. So that's actually been fine, and we've been able to, with a lot of the companies around the world, have you actually had a lot of Zoom calls, just exactly the same as this. So last week I was sitting with the CEO of a bank in Bangladesh and his management team, where we were discussing basically just as right now. So our sort of understanding on what's going on around the countries we invest in and the companies has actually been fine. And having the whole family at home now, the kids here in Denmark are back at school. That's fine. It was actually quite a good time, having the kids and wife and everything close to you for a month and a half or so, and to try and experience that homeschooling all that, but it's been fine. The biggest disadvantage is that I now seriously need a haircut.
Yeah, you seriously need a haircut. But I understand that you can keep in contact with the company that you invest in. But is it hard to make due diligence for new companies?
No,
investments.
Not really. We've done the same thing. There's a healthcare company in Egypt. We met actually in Morocco, in Marrakesh, in January, when things were still open, and we thought this might be an interesting company, and we've spoken with them over the phone since. But also, during this lockdown period, we've been able to sort of have contact and Zoom call, and further analyze the company and get into more details. Of course, we would love to get on the ground and see their facilities. We have to wait for that. But also that we're actually able to sort of get most of the information that we really want. Also for new companies.
So during this period, have you made any new investments in new companies, even if you haven't been there meeting them?
Yeah, we've actually made an investment in Egypt in a bank in Egypt, and we also made a small investment in a bank in Pakistan. Both countries actually seem to be doing on a relative basis well compared to many other places, and those particular two banks, they have fallen quite a lot in share price, and they actually have some earnings that are very resilient. So we actually don't see that their earnings will fall very much this year, even though we have the corona. One of the reasons is that they have a lot of state treasuries, which is sort of safe interest payments they get. So we made two small investments in those countries because on a relative basis, I think they'll do great.
Okay. So you can continue with your work, and it's nice to have the family at home. It looks great. If you look at Denmark and Sweden, we have had some different tactics around the corona. What does the Danish people say about Sweden today?
In general, or just about the corona?
I think about corona and the Tegnell effect.
No, well, obviously we have two different strategies, and the Swedish strategy has been analyzed and written about all over the world. This morning, the Economist, the weekly magazine, came out with an article on Sweden, and basically their conclusion is that the jury is still out. We can't really conclude if the Swedish strategy or the sort of Danish or the more traditional strategy is which one is best. Obviously, if you look at the numbers right now, Sweden has had a lot more death and a lot more cases than here in Denmark. But certainly in Denmark, we have a much bigger economic bill to pay, at least right now. As things has kept open in Sweden, and people have been able to be more productive. Like now, I've had my kids home for a month and a half. It was actually nice, but still, homeschooling takes away some concentration, and that happens to a lot of people. Generally, people have been a little bit less productive. There is an economic bill that will be much bigger here in Denmark than in Sweden, I imagine. And you can argue that this bill basically takes future investments away from the healthcare system and other places. So it's still early to say. There is definitely in the media, in the Danish media, a lot about Sweden. And if nothing else, Sweden have once again produced a great thing. You have ABBA and Ace of Base and Volvo V90. Now you also have Anders Tegnell.
Exactly. Yeah.
I heard you can buy shirts with his picture on.
Exactly. Maybe you could export him. It could be a big export. Yeah, we could export him.
Yeah.
At least some merchandise around him. Okay, let's talk about you, Hans-Henrik, and James, the team around Frontier Markets, and get to the point of this webinar. can you tell me a bit about your background and James' background?
Yeah, sure. So we're two managers of the fund. Myself, Hans-Henrik, and then we also have James Bannon. James, he's Australian but lives here in Copenhagen, married to a Danish woman. But he started out at Bank Invest, the same place that I worked at, where he was actually stationed in Vietnam doing private equity investments for Bank Invest, which had some Danish pension funds that invested in them. So he was stationed almost 4 or 5 years in Vietnam doing private equity investments. So he really saw companies in the frontier market space, how they operate really from the bottom up or the inside out, you can say, as they had huge investments and were sitting on board of directors in certain companies. And then when he moved back in 2011, he joined me at my previous employer called Bank Invest, which is a Danish asset manager, where basically I was doing exactly the same thing as we're doing today with the Coeli Frontier Market Fund. I started working on the fund in 2007, investing in Nigeria and Kenya, Vietnam, Bangladesh, everywhere around the world where we look at these small overlooked countries. So I've been doing it for 13 years now, and basically seen everything of all kind of crises, etc. So James, with his background, that was a perfect match. When he wanted to come back to Denmark and then work with me. So we worked at Bank Invest a couple of years until we wanted to join forces with Coeli, where we have a setup that James and I are co-owners of the management company together with Coeli that runs the fund. So essentially, I have a very big part of my own savings in the fund and through the management company. So one thing you really want when you invest in a fund like this is that the manager is committed. And one way to commit a manager is basically he put his mouth where he put his money where he's working, right?
Yeah.
So now both James and I have extensive experience in this frontier space, and we've been doing it for 13 years, both of us.
I guess 13 years in this market is a very long time. A lot has happened in 13 years in the frontier market.
Yeah, so it's obviously the financial crisis is on most people's minds, but we've experienced also lockdowns. We've experienced like the Arab Spring in 2011, which was quite severe. We've experienced currency control, or where countries basically won't let you exchange your money out, and we've seen all kind of political nonsense initiatives that are counterintuitive, and we just try to navigate in that whole space. And the more experience you have, the better you are at navigating with this. So, for example, in 2015, Nigeria, which is a country we actually like, they decided to they had pegged their currency to the dollar, and all of a sudden people they were queuing up to get your money out. And we actually sold everything we had and got everything out before they closed down, in terms of getting your money out. And now that same thing has just happened. Okay. We sold everything we had in Nigeria in end of February, early March. Yeah. And now you can't get your money out of Nigeria. Oof. Because the oil price have fallen, it's an oil economy and so on. But basically, pretty much everything we managed to get out at the official currency exchange rate. And now we just know that there's billions of dollars in queue to get your money out. Okay. That's things that, if you have experience, you might be lucky, or you can sort of see those things happening and react to it.
All right. thank you. Bara för att sammanfatta lite kort då, så lång erfarenhet både på James och Hans-Henrik, och där Hans-Henrik berättar är ju den modellen vi har på Skov, att som förvaltare, vi är delägare i ett eget bolag och i fonden, och att du helt enkelt vi vill att man ska leva med sina investeringar och verkligen sitta i samma båt som er kunder då. Så att det är egentligen det som är sammanfattning av det där. Och det var ju från Bankinvest som Hans-Henrik och James jobbade under många år tillsammans innan de då valde att komma till oss. Och sen dess har de då förvaltat exakt samma sak, men via Coeli istället då. All right, let's go to the main point, the frontier markets. Let's start with the investment universe, Hans-Henrik.
Yeah, good idea. Yeah, so my thinking was that I would go through sort of the investment universe and this sort of the case behind why I look at this at all, and then maybe go into a little bit more details on how we work.
Yeah.
In these countries, how we find shares, and then I'll provide a bit of an update on, of course, also the Corona, and then at the end we can talk a little bit about the returns we've seen and the valuation of the fund, and then wrap up. And there might be questions.
Yeah.
But okay, here on the graph you have basically all the frontier universe that we would look at. So essentially, all countries like in the world, that are not part of the Western world or part of the traditional emerging markets, those countries we will look at. So that's around 150 countries around the world, which you can see on the graph here is marked in orange, and they tend to be smaller countries. They tend to be more poor than the rest of the world. So you have a lot of countries in Africa. You have certain countries in Middle East, Central Asia, certain countries in Southeast Asia. All this is 150 countries. And if we look at sort of there are some structures here, structural developments that are interesting, because these countries, they look a little bit like emerging markets 20 years ago.
Yeah.
So if we go to the next slide up here, then
before we leave this slide, Hans-Henrik, I get a question. If you invest in North Korea.
Yeah, well, North Korea. Okay, maybe just a step back. We don't just go back on the previous slide. So we don't invest in North Korea. Out of these 150 countries, there's a lot of countries that are uninvestable.
Yeah.
But and I'll get a little bit back to that. How we work. So essentially, out of these 150 countries, you have around maybe 50 countries that has a stock exchange that we can engage with and where we can find some shares. So of course, there's countries like Chad or North Korea or many other places, you won't even be able to find anything.
All right. Yeah.
Sometimes you could see companies in certain countries, they would list their shares maybe in London or maybe on the Nairobi Stock Exchange, so you could get exposure to that country.
Okay.
So we don't invest in North Korea. We don't invest in Venezuela, Iran, some of these countries where you got a feeling that things are moving backwards.
All right.
The countries that are moving forward, we would definitely look at, and I'll get back to that a little bit later.
Okay. Perfect. Thank you.
But if you look at sort of the structural case, the GDP per capita in frontier markets, as I said, they're generally poor. So the GDP, which is the economy, and per capita is per person.
Yeah,
so the economy,
it's in Swedish, BNP per capita, eller BNP per person, så att säga. Sorry.
Yeah, exactly. Yeah. Exactly. It's around $6,000 per capita per person in the frontier space, where in emerging markets it's $15,000. So emerging market countries, which is China, Russia, Brazil, Poland, all these countries that we know are emerging countries and have been growing fast for the last 20, 30 years. They are now middle income countries, much richer than frontier market countries. Of course, they're still a lot poorer than the Western world, first world countries, but they have moved up over the last 20 years. So if you look back 20 years, emerging markets GDP per capita looks similar, around the 6,000 mark, as frontier markets looks.
So investing in frontier markets is basically to invest in China or India or Brazil, but like 20 to 30 years back.
Yeah, exactly. And the reason why you want to do that is if you had invested, say, in 2000 in emerging market, China and Brazil and so on, yeah, of course, it has been, some big ups and downs along the way, but you have made a lot of money by being invested in emerging market over 20 years period, because the journey has been so strong. When you aggregate a lot of growth every single year, you eventually just make a lot of money as an investor. But you have some big some big downs, some big ups along the way. And that's the nature of the business. So that's what we try to replicate, to find countries that can, over the next 20 years, experience the same thing, the same attractive returns as we've seen in emerging markets, based on sort of these structural drivers. And one of the reasons that, just go one back, yeah, one of the reasons we have this lower GDP per capita is people in frontier markets today are just less productive than people in Brazil or China.
Yeah.
So as an example, you can say a farmer in Brazil over the last 20 years, he's gotten access to technology. Today he has a tractor to run his business, so he's all of a sudden much more productive because he can have machinery that helps him. But he's also got knowledge and access to fertilizers to fertilize your seeds that will grow stronger and better, so he gets more output from his farming. That has happened over the last 20 years, where if you compare that with the Kenyan farmer, he do not have that today, but is getting access to all this kind of technology, tractors, fertilizers, etc., know-how. So, and it's much more easy to grow when you don't have the technology today, but you will have it tomorrow, and you grow from a low base. So that's why these countries, it's much easier to grow, have high growth going forward, than say these middle income countries where the farmer or the person in Brazil or China, there's other things that has to matter now for them to grow faster.
Yeah. Okay. So
that's one factor. So that's the productivity of each person. How productive are each person? Today, they're not very productive in frontier markets, but tomorrow, as they get access to technology, they will get much more productive. The other part of the equation is the next slide, is the number of hands available to work. So, as been well reported, in the Western world, we get fewer kids, and there's more and more people that has retired as we live longer. So here we have a graph where on the left-hand side you have the gray bars where you can see the Western world. But there's a lot of people in their 40s and 50s, and also to an extent in 60s. But there's fewer and fewer kids, from 0 to 20. So as these people, they leave, as the people in their 50s, they over the next 10 years leave the workforce. That's a lot of people leaving the workforce, and they're not being replaced to a large extent by young kids that grow adult. So the workforce will actually contract a little bit in the Western world going forward. That means that number of hands available to work will shrink. Where emerging markets, that's the middle graph, the blue one, you have a lot of, you have over the last 20, 30 years produced a lot of kids that now are adults and have entered the workforce. That has led to a lot of GDP growth. And there's basically been nobody who has retired or went on a pension. So the workforce has really expanded significantly. But as they got richer, they've also gotten fewer kids. Yeah. So that's what you can see here. There's the graph is sort of, there's fewer and fewer kids being born. And that means actually that the workforce has grown rapidly over the last 20 years, but is now starting to stabilize. Where frontier markets, which is the red graph on the right-hand side, you don't have any people that really retire, and you have a lot of kids that are being pushed into the workforce every year because there's a lot of young kids that turn adults. And that just means that there's a lot more hands available to work. So the two mega trends we have going for us here is today people are not very productive, yeah. But as they get more productive, that will create a lot of growth. And the number of hands, again, will also expand quite significantly. And end of the day, GDP is made up of two things: the number of hands available and how productive each hands are. And that's where you have some really strong tailwinds, structural tailwinds in the frontier space. And if you go to the next slide, you can see this actually equates into much higher GDP growth. Yeah. So here I have taken Kenya, Bangladesh, Georgia, Romania, Vietnam, Tanzania. That's around, half of our of the portfolio today is in these countries. In 2019, even though it might feel a little irrelevant talking about 19 right now, or that is coronavirus, but nevertheless, if you look at the figures, last year these economies grew like 5, 6, 7%, all of them, yeah, year on year. That's the IMF figures. And compare that to BRIC, which is China, Russia, India, Brazil. That they grew around 3%. US, EU a little bit lower at 2%. And it makes sense that the US and Europe can't, we are already wealthy, we have a lot. For us to, grow fast, it really takes a lot. Yeah. Where if you come from a low base as these frontier market countries, it's easier to grow fast. But even this year, with the revised sort of growth forecast from IMF, you can see the same countries in frontier, they're forecasted to grow between 0 and 2%. Pretty, that's not something to write home about, but it's...
Yeah, it's better than -6.
Exactly. In the US and Europe, it's around -6. That's significant. That's really going to hurt. Yeah. So these economies grow quite a bit, and I think that's sort of the learning here, and that things are growing in these economies. Share prices might go up and down, and lately they've been going down, of course. But it's really important to keep focus on structural drivers that will benefit you as an investor. Yeah. So that's why I think during this coronavirus, it's important to sort of stay calm and say, what is investment all about? Yeah. And I think if you go to the next slide, I have sort of a quote where that says, progress happens too slowly for people to notice, and setbacks happen too fast for people to ignore. So as an investor, you don't necessarily focus on the progress that happens, like the growth that we see in frontier markets. It happens so slowly. Yeah. It's a little bit like, and I think investment should be a little bit like watching grass grow. Yeah. It happens so slowly. You can't really see it. But then you have, setbacks, and right now it's very evident with the coronavirus. That's everything on your mind. That is this current setback with the coronavirus. And I think it's just important to keep calm and look through the cycle and see what is actually going on. Where will things grow? Because end of the day, it is growth that will create that share prices will go up.
Yeah.
And as an investor, I think you could put it this way, that when you buy a share in a company, it's a little bit like buying a basket of apples, where there's a year on each apple. You buy 20 apples. There's an apple that says 2020. There's an apple that says 21, 22, 23, 2030, up to 2040. That's what you buy. This basket of apples with a year on it, each one of it. The apple that says 2020, that's brown and hurt, and there's like worms coming out of it. You don't want to pay much for that apple, of course.
Yeah.
And the apple that says 2021 is also a little bit brown, but there's no worms in it. But the 2022 apple looks fine and shiny, delicious. The same with the 23, 24, and going forward. You might have an apple that says 2030 that's also brown and sour. But essentially, that basket of apples you buy, you will still pay, a decent amount of money for, because even though there's one apple that has worms, rest of the apples could look fine. And that's what you have to keep in mind when you are an investor. That share prices right now reflects that single apple with the worm, but not the next 19 apples that might look shiny and delicious.
Okay.
So focus on the long term. That's the whole idea.
Yeah, and we always say that if you invest in the frontier market, something you should you should own it, and you should own it for a long period.
Yeah.
As a part of the portfolio. So if I conclude this, it's about growth, the underlying growth. It's about the effectivity in the production, and it's about the demography, that you have a lot of young people coming and that can do the work, right?
Exactly.
That's the underlying case. And if you work in this market, I guess you need a process, how you invest in the different how you put out the investments. So tell us a bit about that.
Yeah. So what we do is, it's not rocket science. We try to keep it simple. We look at the country, then we look at the company, the valuation, and then we make an investment or not. So the country, as mentioned earlier, there's a lot of countries to look at. Just stay on the previous slide, okay. So here you can see the process. So we start out with the country, evaluating, is there some structural drivers that will move it forward? And is there sort of a political setting that at least is not moving things backwards? Because if there are some settings that are moving things backward, we don't want to bother. There's so many other countries to focus on, so we don't want to bother. So you have countries like Venezuela, that's a no-go. You have Iran, that's a no-go.
Yeah.
North Korea, as we spoke about before. Why bother when there's so many other interesting countries in our universe to look at? So then we look at these countries that has a positive setting and will move forward. They will still be poor in 10 years' time, but they'll just be less poor than they are today, essentially. Those countries we will focus on. So then we move on to sort of the company analysis, and this analysis is no different from sort of other fundamental investors. But our focus is a little bit more on, or a lot more on the strength and the quality of the business. So we only buy very strong businesses that we know for sure is around in 10 years' time and has benefited hugely from this economic growth that we will experience.
Okay, yeah.
So for example, there might be companies, there might be like a steel manufacturer in these countries, like in Kenya. And obviously there will be demand for steel in Kenya, a lot of demand to build buildings, etc. But what's important to think about here is, well, if this steel manufacturer all of a sudden start to earn a lot of money, then the next day there will be somebody building a steel manufacturing right next door, selling exactly the same kind of steel. And they will start to compete prices down that will make your investment hurt.
Yeah.
So those companies, they might do well in the short term, but we don't look at them. We look at the ones that has a strong business where, for example, you own a brand. It's a little bit like, you know, a Coca-Cola company of the frontier space. So, you know, people can of course see Coca-Cola, that's a great business, but you can't replicate it. You can't build a factory next door and you know, make it drinkable soda, and you have to call it something else and sell it the same way as Coca-Cola, because people recognize Coca-Cola and willing to pay a little bit more for Coca-Cola, for brands. So we own a lot of brands in our universe. So that's the company analysis, that we have quality businesses in our business, in our fund.
Because as I understand it, you don't want to trade these companies forth and back. When you buy a company, you own it for quite some time, I guess.
Yeah. So we would ideally like to own these companies forever.
Yeah.
Of course, sometimes there can be that, you know, management screws up or the business environment changes, then we have to reevaluate. But essentially, we like to we see ourselves as business owners. We own the business. And then we don't care about, you know, share price over here that goes up and down, but we own a business and think about there will be earnings and how that will develop, and we get our dividend. That's the way we think. We are business owners for the long term. And the added benefit, of course, is then we don't have to trade it. There's always a lot of trading costs whenever you move around.
All right. And as I understand it, it could be hard to trade these companies as well, because the markets are not that effective as they are in the Western world. Is that an effect, or? Yeah,
well, there's of course, you know, I don't know, insider trading or whatever. If you don't trade it, you don't care about that. But the liquidity, it's liquid enough for us to buy the shares. The fund is not. We're not that big that we will sort of we can buy or sell shares. But it's of course a little bit different than I guess, you know, buying Microsoft or Amazon.
Yeah. Okay.
But it's generally the bigger companies in these countries. So they are liquid enough for us to trade. So it hasn't been an issue for the last 13 years when we traded. And if I can just wrap up that previous slide, Pierre. So, and the last thing, of course, is valuation. We do look at valuation. So, you know, you can have the greatest company in the best country, but if it's way too expensive compared to everything else, we'll just put it on a list where we monitor the company, and then later on we might buy it if it falls. But if the valuation is right, we will then buy and put it into our portfolio. And if we go to the next slide, an important part of investing in this universe is getting on the ground and getting to know your companies very well. So here you can see on that on the slide some of the places James and I have visited over the years, with also some of the companies that we've visited. And it's important from, you know, a couple of perspectives. One is when you get on the ground, you sort of get a feel of the economy, and we also meet the local IMF representatives if they're around, or the World Bank. We meet journalists, we meet local macro analysts, the central bank generally also, that can give us sort of insight to the macro if things are okay. But then, of course, we also meet the companies. We sit down with the management team, look them in the eyes about, you know, how things are developing and the future forecast. But equally important for us is also meeting competitors, meeting distributors to the company, like meeting the customer, talking to maybe employees, and even like talk to the taxi driver. As an example, when, you know, we own shares in Safaricom in Kenya, which is the the leading mobile operator that also has this mobile money business, where like 90% of all adults has tried to use their mobile money to transfer mobile money or money from person to person with their mobile phones. It's called M-Pesa. And then I was talking to a taxi driver and said, talking a little bit about, M-Pesa. And he basically said to me, well, M-Pesa, it's like oxygen. And that just sort of indicates to you the strength of that business. Yeah. But this will also be around in 10 years' time. And as still a lot of people moving from using cash to pay, are moving every year, a lot of people move in to paying with the M-Pesa wallet. And that's sort of the things you can get from being on the ground and talking to all kind of people.
Hans-Henrik, we got a question about responsible investments, but we'll get to that later. But we had another question here I think is pretty interesting. We have a scale in Sweden from 1 to 7, I think it is, for a risk scale in funds. And today frontier markets is defined as the risk level 5. A lot of the appointed countries for frontier markets investments are politically unstable. Should the risk level be increased because of the unstable countries? What do you think?
What's going on here is that, if an individual country would be a 7.
Yeah.
But if you take 20 different countries with 20 different political unstable systems and put them together in one basket, there might be one Arab Spring one year, but then you have 19 other countries that will, perform well and continue the trend. So basically, when you add them all together, you reduce the risk of the political risk, because actually you haven't seen over the last 13 years I've seen it, you haven't really seen big shakeups. You haven't seen like things being, only a few places I've seen things being nationalized or sort of, riots or political systems go apart. So when you add them all up in a basket, you will have once in a while like an Arab Spring, but the rest of the portfolio is still having that sort of structural trend going forward. Okay. And that means the volatility of the fund is less than the individual countries. So that also means that you reduce the risk. And one fortunate thing about these countries is also they are not part of that geopolitical risk you see around the world, where you have emerging market countries really engaging in geopolitics, from Erdogan in Turkey, Xi in China, Putin in Russia. You can even talk about Brazil. Yeah. That politically they've definitely not moved forward. They probably even moved backwards, and they have engaged in a more sort of volatile Western world with Trump and an EU that might break down. Who knows? So on a relative basis, they are unstable, but on a relative basis, they've actually performed quite well because that hasn't changed. They might even have moved forward.
All right, perfect. Do you have anything more around this slide, or could we go further? I think the time is running out.
So let's move to the next slide. So what's important also running around and getting around in this world is, we are responsible investors. We think this is really important because we want to align ourselves with good guys, companies that treat us well. Because if the companies they don't treat like their employees well, or they don't treat the nature or these like other stakeholders, if they don't treat them well, us as minority shareholders, we won't be treated well either. So it's important for us with being responsible investor, where we take ethics and everything into account. There's four things we look at. One is sector exclusion, where basically we don't invest in any sort of commodity-related industries. So that means oil and gas, because essentially, you don't have to read many books about Africa, that 80–90% of all corruption in Africa is related to the oil and gas or the commodity industry. You have Western world companies that want to dig out oil from the soil, and in between you have a Nigerian bureaucrat. That's just a cocktail for corruption. And the only way to become a CEO of a Western world company, oil company, is that you're willing to pay the bribe to the Nigerian bureaucrat to get that oil. Otherwise, you won't become the CEO. So we don't want to invest in those companies. And obviously, weapons, pornography, gaming, we don't invest in either. But then there's also assessment, where we get on the ground and we meet the company on site. We see the facilities, how safety, etc. We speak to the employees, as mentioned before, but also stakeholders. The guy in the street, the taxi driver, we can ask, what do you think about that company? Would that be a place you would like to work? And that tells you a lot about these companies. And then we have engagement, where if there are some issues or issues rise, we would talk to the management. And we have had some successful engagements with various companies, where, for example, we have an ice cream producer in Ghana, where all of a sudden they started not to speak with us as investors anymore. Okay. And then we did engage both with the stock exchange and with the parent, majority shareholder, and then we started to get access again to understand what's going on. And then we have evaluation. All our fund is being evaluated by ISS ethics for human rights, labor standards, etc. And there's no companies that are sort of red flagged by ISS ethics. They also do a climate report, and actually our holdings on average produce 73% less carbon dioxide than the benchmark. So from that perspective, we're doing quite well. It's important to be a responsible investor in this part of the universe, where our investment world, where things tend to be a little bit more dodgy.
Yeah. I think that cleared the question we had before as well.
Yeah, exactly.
Perfect.
All right. So let's move on to just a few examples. So here just have like 6 companies we've invested in. Safaricom, as I mentioned before. We also have Vina Milk in Vietnam. This company we've owned since 2007. This is like a dairy producer in Vietnam, a little bit like Arla, just that people don't drink milk today, or they do drink milk, but as they get richer, they will drink more milk. Then we have Mobile World, which is running the biggest chain of electronic stores. So as people get wealthier, they will also want a flat screen, all kind of electronics, etc. And Mobile World has also expanded into grocery stores. So now they have 1,000 grocery stores across Vietnam where you can buy fresh food. And actually in March, they saw their stores increase their revenue by 50%, 50. Because most of the people, when they do their groceries, buy meat, fish, and so on, that's open air markets. You do it in Vietnam, as most of the countries we operate in.
Yeah.
But because of the coronavirus, people started to think, well, it's a little bit unhygienical going to these open air markets where you have meat lying in the sun that you should buy. And then they actually started to move into these, what is called modern retailing, into these grocery stores. Yeah. So they saw a 50% increase.
Wow.
That's quite interesting.
Yeah.
And then we have Bank of Georgia, a bank in Georgia, where Georgia is actually, people won't know much about Georgia, but it's actually been the country that's probably reformed itself the most the last 15 years. If you look at the ease of doing business, how easy is it to do business in Georgia? They're ranked number 9th in the world.
Wow.
So, and there's many funny anecdotes from Georgia, how, it's visa-free access. And basically what they did was they said, well, the central bank governor, I remember speaking to him about it, that he said, well, we looked at the IMF GDP per capita figures. All the countries that has a GDP per capita higher than ours, it's just visa-free. You can just get in. Yeah. And that's really, productive. Then we have Fan Milk in Ghana, which has, it's the leading ice cream producer. They have basically 15,000 guys with push carts or on bikes. We have these ice boxes in front, and then they sell them from all kind of street corners across the country. Right. And you can say, you know, if it's hot, you want to buy an ice cream, and you know, is it hot in Ghana? I think so. And this is locally produced, so it's also produced at a price that people can pay.
Yeah.
So this is an interesting small investment. And then we have Tanzania Breweries in Tanzania as another company. But we can move to the next slide and just see.
But what we can see here, that is a lot of consumer driven.
Yeah, exactly.
Most of the companies, and that's what you talked about before with people getting more money because they are the GDP growth is increasing, right?
Yeah, as you get more money, you start to, you know, buy branded goods like the Wiener milk or like the fan milk. You start to buy flat screens like, you know, Mobile World, but you also start to use banking facilities.
And so that you can see here, because a lot of your companies is in financials.
Yeah, exactly. Yeah. So banks are actually also quite strong businesses. You can ask yourself, over the last 20 years, how many times have you changed your bank?
Yeah.
People don't change bank. And the same goes in this part of the world, where basically the biggest part of the population do not even have a bank account today. So, you know, as they get wealthy, they start to have a, you know, savings account, put money into the bank, and the banking system then, you know, let the money out. So this is actually very simple banking. Yeah. And it's a very strong business where many countries you have inflation of 8-10%, and you put the money in the bank and you get 2% in interest rate. So basically you get a negative real interest rate of like, you know, 6%. And then they just turn around and rent it and lend it out to, you know, big corporates or maybe even small businesses that is needing it. And then they just have to watch that they don't, you know, screw up on lending it out.
Sorry, but that sounds like a money machine.
That's what it is.
Yeah.
But it's also, of course, now when we have a coronavirus, they are also most exposed to businesses going, you know, having trouble.
Yeah.
So you have to take that into account. But that's also why every year they put money aside for bad times.
Yeah, right.
But still, these kind of banks, it goes a little bit more up and down. But it is essentially a money machine, and competition is not really strong, or there's not fierce competition. And then we have consumer staples and consumer discretionary. Basically, if you add those together, that's almost half of the portfolio. So together with financials, it's 90% of the portfolio or 80 is banks and consumer companies. And that's really the ones that benefit from the economic growth over the years.
All right. And I guess in the financial area, the loans are increasing, right?
Yeah. I mean, they are. Yeah. As the economy grows, you know, there's a factor that makes this increase. Okay. But let's move to the next slide. Just
one question, Hans-Henrik, about why do you have so much in Vietnam if you compare with other countries?
Yeah. So Vietnam is basically a country where, you know, the stars and moons and the sun is aligned. Everything is really in their favor. They have succeeded in reforms and made the right sort of structural investments in building roads, port facilities. You know, power is extremely important, and building the right circumstances for foreign businesses to invest and outsource to Vietnam.
Okay.
So now, today, for example, Samsung builds 40% of all their mobile phones in Vietnam. So there are like 90 million people, and they are like moving into the cities, getting these jobs, and they're going from, you know, from the farmland where they earn maybe a couple of dollars a day to now they earn like $10 a day.
Okay, all right.
Yeah. So Vietnam is really spot on for what we try to do. In terms of the coronavirus, of course, we need to update on that as well, because we haven't seen much from these countries. You know, if you look at the media, social media, and so on. And I'm not a judge here, but there's just some certain factors in place. So from what I can read, there's two things that kill you from the coronavirus, and that is if you get the corona and you're very old, that's dangerous. But also if you're very overweight, that's also very dangerous. And if you look at the population in these countries, you can look at the top table here, graph here, that, you know, in Kenya, Tanzania, Nigeria, around 3% of the population is above 65. And Morocco is a little bit higher. And then the Asian countries, Sri Lanka, Vietnam, Bangladesh, between 5 and 10. So quite a small proportion of the countries are old.
Yeah.
And if you compare that to, say, Italy, 22% of Italy's total population is above 65.
Yeah.
That's probably one of the key factors why we did see Italy experience such a terrible, you know, the pictures were terrible from Italy, of course. And the same now below, I just have the average, you know, body mass index, the BMI, where if you're between 20 and 25, you're normal weight. If you're above 25, you're essentially overweight. And the same goes, you know, Kenya, Tanzania, Nigeria, you know, all these countries, they're between like, you know, 21 to 23. They're right in the middle. And, you know, if they want it or not, that's just the way it is. And then you have Morocco that's a little bit above, but nevertheless, where then you look at the US, it's almost 29, which is on average people are severely overweight.
Yeah.
And that's dangerous.
Yeah.
So maybe that's why we haven't seen, you know, of course we've seen cases, we have seen death in the frontier space, but you haven't seen things go mad as we saw in Italy. The jury, of course, is still out. The healthcare system is, of course, poor in these countries. Some of the cities are very densely populated, but we have to wait and see. But so far, we haven't seen, you know, things explode, essentially. But nevertheless, there will be an economic impact, and that we can see from the next slide. That, you know, the returns of the fund this year, basically the fund has not been discriminated against versus everything else. It's down almost 24% this year in Swedish krona.
Yeah.
That's a little bit more than the index. And also, if you take the emerging market, MSCI emerging markets is down only 15% this year. But the interesting thing about emerging market is if you take China out, China has performed really well. MSCI emerging market, excluding China, is down 22%. So pretty much in line with the frontier market, Coeli Frontier Markets Fund. But it makes sense that the Coeli Frontier Market Fund fall when you have this sort of global pandemic and people are scared and they pull their money out of what they appear to be the most risky area of their portfolio. But have you been in, say, MSCI Latin America? That's down 43%, so it could have been even worse, of course. And S&P 500 is down only 6.8%, which is, you know, that's affected by, of course, the Fed, the central bank in the US, that prints money and buys corporate bonds, etc.
Yeah.
That doesn't.
And also that they have the big tech companies. It's a big part of that index, and they have done it really good. I think the time is 1 o'clock, but we have one very important picture, I think, and it's about the attractive, both absolute and the valuation about the fund and the market.
Yeah, so I think
take us through these numbers there.
So that's So I think this is where people really should listen. This is fundamental investing, you know. So if you have these, you know, universe, things are growing, and they will be growing faster than everywhere else on average. We have quality businesses like, you know, the Wiener Milk or, you know, Mobile World, Safaricom. But these businesses, the portfolio on average today, you pay around 7.8 times price earnings. So basically, you pay 8 Swedish kroner to get access to 1 kroner of earnings. So if you keep your investment for 8 years, you basically double your money if nothing else has changed. This valuation, so basically the lower the PE ratio is, the cheaper the fund is, the higher, the more expensive. And we haven't seen this kind of valuation since the financial crisis. If you compare that to, say, emerging markets, it's at 13.7. So emerging market today is almost twice as expensive as the Coeli Frontier Markets Fund.
Yeah.
And you can look at the graph below, where the sort of orange color is the, yes, exactly. The orange color, that's the Coeli Frontier Market Fund. 2 years ago, the fund was trading in line with emerging markets at around the 14 times PE. That's where emerging market is back again today. And so why is that? It's really also something that puzzles me. I think there's a lot of investors, foreign investors, that already has left the frontier markets because prices have fallen a little bit. Then more people sell because prices fall. Then it will fall even more, regardless of how earnings are doing. But because prices are falling, others are selling also. Yeah, I think that has pushed it down, and it's just a puzzle. We think eventually the valuation will converge with emerging markets down the road, but we can't forecast if that will happen the next 6 or 12 months, or it will take like 3 or 4 years. But eventually people will wake up and see that things are growing, earnings are growing quite decently for the companies in our universe, and realize that maybe a small part of one's portfolio is well suited to be in this universe. Definitely today, you don't really pay much for it. That's the end of the story. And that's about, that basket of apples, where of course there's one apple 2020 that's poor. Yeah. That basket of apple have basically fallen, it's basically half the price of the same basket you get in emerging markets.
Så som en sammanfattning då, vad vi kan se här är alltså att Coeli Frontier Markets Fond har en betydligt lägre värdering både jämfört med sitt jämförelseindex och Frontier Markets Index som är 10,5 då i trading PE. Vi har också mycket lägre än Emerging Markets Index, det vill säga tillväxtmarknadsindex, där man var ungefär på samma nivå om vi går tillbaks 2 år. Och såklart är mycket lägre än MSCI World, men det ska de ju också ha, det får man ju tillägga här då. Men att man ändå har en ganska bra utdelning med underliggande bolagen eller snittet av bolagen. What can you say about return on equity? Why is that so much higher in your fund if you compare with the index?
Because it's consumer companies and it's banks. So like consumer companies, you sell your products at a higher price because you're selling a brand.
Okay.
You don't have to build a factory to sell a brand. So the returns on your investments are growing over the years as the brand value increases over years. You don't need new investments to keep your brand value high. Whereas if you steel manufacture, to expand your business, you need to build a new steel factory. Yeah. If you own Coca-Cola, if you own like Mina Milk or Fan Milk, you don't have to build put up price. You could just put up prices, or people buy your products because it's a brand.
Perfect. Thank you. It was a good explanation. Let's wrap this together.
Yeah.
And see. So go through the main points, please, Hans-Henrik.
Yeah. So as we talked about, frontier markets looks like emerging markets 20 years ago. You really have the benefit of these mega trends, some structural drivers that will drive growth and earnings for companies. And if you look at the sort of the corona virus, there's definitely some advantages, clear advantages in the frontier space with demographic profile and so on. but it also lacks in other areas, you know, healthcare system and so on. So the jury is a little bit still out if we perform better or worse, but of course there will be an economic impact, no doubt. Generally, frontier markets has low correlation to rest of the world. This time around, when you have a global pandemic where every country in the world has been hit, the correlation breaks down, but generally you should see over time the correlations are lower. And that's good for sort of putting together a portfolio. And the valuation, the investment opportunity right now is extremely attractive priced. It's dead cheap, as we haven't seen this valuation since the financial crisis. And because the reason why it's also cheap is because share prices have fallen, but the earnings haven't been heard. And as share prices fall, it just opens up a fantastic investment opportunity. But investors should still look at this, you know, from a long-term, you know, as a long-term investment. And just forget it will be going up and down. And just forget about it when it goes up and down. Try to sort of think about the basket with apples.
Yeah.
And then, you know, people will just be exposed to sort of what I would think is a very attractive expected return profile, because of course we can't promise anything. Yeah.
Thank you for that conclusion. What we can say is, egentligen vad Hans-Henrik säger på slutet här, det är ju det vi pratar om hela tiden, att investera i frontier market ska vara en del av den aktieexponering du har generellt sett. Så länge du har lite tidsperspektiv på dina pengar så kan du stoppa in pengar här, men du ska vara investerad över tid. För under perioder kommer du förlora pengar, under perioder kommer det gå extra bra. Men över tid så har du en stark tillväxt i de här underliggande bolagen, vilket borde innebära över tid att du får en bra avkastning. Så att som i allting så ska man ha lite av varje, och vi gillar ju det här med en väldiversifierad portfölj där vi jobbar både med aktier, räntor, absolut avkastande, private equity och fastigheter. Och här ser vi att frontier market ska vara en del av den aktieexponering man har. All right, Hans-Henrik, thank you so much for joining us. I hope I see you on the office soon. And,
yeah, me too.
Yeah. And stay healthy. And ursäkta att vi drog över på tiden, men nu får vi stänga ner det här tror jag, så att folk får i sig lite lunch eller gå på andra möten än vad man nu ska göra. Så tack så mycket för att ni var med här idag. Och hej då!